Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial jargon to find the real story. And folks, today's story involves some selling off and restructuring. We're diving into a recent filing from Calidi Biotherapeutics. Incorporated, their latest report reveals a significant move in their business as they sell off a major part of their operations at a pretty substantial price. Let's break down what went down and what it might mean for the company's future. Before we jump in, if you are new here and love getting clear, no-nonsense insights from these thick corporate documents, hit that subscribe button. And for a deeper dive into these topics and to chat with fellow investors, join our Discord community. The link is in the description below. Alright, so Calidi Biotherapeutics Incorporated, ticker symbol CALDI on the nice American, has just announced a pretty big deal. They've entered into some agreements that essentially mean they're selling a majority stake in their subsidiary Novacell. Incorporated, this isn't just a small divestiture. It is a significant restructuring that could reshape the company. The main event here is the stock repurchase agreement and a material purchase agreement. Think of it as Calidi selling a big chunk of Novacell, Incorporated to Novacell, Incorporated itself, with the intention of raising capital and simplifying their business structure. They've sold 2025,000 shares of Novacell. Incorporated common stock, that's not a small number, and it represents 75% of Novacell's equity and a complete 100% of Calidus ownership in Novacell. Incorporated, they're getting paid a total of $6 million for this sale. Now, how are they getting paid this $6 million? It's a mix. Part of it, $1,214,864, is being settled by cancelling existing debt. This means old debts are being wiped clean in exchange for this ownership stake. The remaining balance, a hefty $4,785,136, is being paid out later as deferred consideration. So, they're not getting all the cash up front. And there is more to this deal. After the deferred payments are made, Calidi Biotherapeutics Incorporated will also receive an ongoing royalty. This royalty will be a fixed percentage of something called covered gross revenue that comes from specific materials listed in the agreement. This is essentially a way for Calidi to continue benefiting from the success of Novacell Incorporated even after selling it off. This move is pretty strategic. They estimate this transaction will lead to about $0.5 million per year in savings on general and administrative expenses. By selling off this part of their business, they're streamlining operations and cutting down on overhead. The material purchase agreement also did something important. It basically replaced and updated an earlier intellectual property assignment agreement from July of last year. This new agreement details the sale of certain purchased materials to Novacell Incorporated, with some limitations, of course. Novacell Incorporated is also taking on certain liabilities and agreeing to a prohibited use clause, which interestingly includes a ban on any uses related to oncolytic viruses. This restriction is quite specific and hints at the nature of the technology and its potential applications. Calidi Biotherapeutics Incorporated will, however, keep some cell lines for their own use. As a consequence of this new material purchase agreement, that old intellectual property assignment agreement is officially dead in the water, replaced by the new deal. No extra termination fees were paid beyond what is already baked into the SRR and MPA. It's all just part of the bigger transaction. So, to put it simply, this whole filing is about the completion of a significant asset disposition for Calidi Biotherapeutics Incorporated. They've sold off a major piece of their business, Novacell Incorporated, for a good chunk of cash, some of it deferred and secured a royalty stream. Now, looking at the exhibits, we see the stock repurchase agreement and the material purchase agreement are filed, which is where all the nitty-gritty details of these transactions lie. Some sensitive information has been redacted, which is standard practice for the SEC. But they've agreed to provide the full unredacted version if the SEC asks for it. So, what is the big picture here? Calidi Biotherapeutics Incorporated is essentially restructuring by selling off a majority interest in Novacell. Incorporated, they are raising cash, reducing operational costs, and retaining a potential future revenue stream through royalties. The prohibited use covenant is particularly noteworthy, suggesting a strategic decision to steer away from certain applications, possibly to focus on core competencies, or to comply with regulatory or market demands. On the financial front, the $6 million looks like a decent sum, even with a portion being deferred. The cancellation of $1.2 million in debt is also a positive as it cleans up their balance sheet. The estimated $0.5 million in yearly G savings is a tangible benefit that directly impacts their bottom line. However, the long Term success hinges on how effectively Calidi Biotherapeutics Incorporated can leverage the cash injection and the ongoing royalty payments. The market's reaction to this restructuring will be key. We need to watch if this move allows them to refocus on their core business and achieve profitability, or if it signals a deeper strategic reevaluation. Without more granular financial data from this filing, it is hard to pinpoint exact future performance. But this deal is definitely a pivotal moment for the company. Alright, that's our decode of Calidi Biotherapeutics Incorporated's recent filing. What's your take on this divestiture and what it means for their future? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe if you haven't already. And don't forget to check out our Discord for more in-depth financial discussions. Thanks for watching, and we'll see you in the next one.